What's going on? Welcome back to Trending Stocks. So today we're going to talk to you about SoFi. I want to give you a breakdown of what really drove it higher today, go over some of the current data points and everything else that you need to know. But first, make sure to hit that thumbs up. And with that said, let's get right to it. So starting off, a round of applause for SoFi. It went up 4.72%, high of 758, low of 723. But more of the important point to kind of bring up is the volume. 50.18 million shares were traded today, 52.4 is the average. So behind the scenes, institutions flicked the switch and really started to buy the hell out of SoFi. And so again, as I've said in previous videos, it's very questionable on what institutions were waiting for. But with Powell's speech today and ADP data coming out as well, the non-farm employment, like clearly that is what institutions were waiting for, just to hear from the big man himself, even though he did say his typical usual jargon, but he did signal that maybe June/July rates might be coming down the pipeline. So I'm going to play this video near the tail end, kind of summarizing on what he did say and everything else, but these are some of the transactions that did occur on the secondary market as well as dark pool. So both exchanges were very, very popular today, and like I said, aided in the volume being as high as it did. So overall, pretty epic stuff. Today there was no news, no SEC filing, so it was rather quiet from SoFi itself. But like I said, clearly it was due to Powell. So he was that deciding factor, what institutions were waiting for. Just to give you a quick update, I brought this up in the past. I think last time I gave you an update, it was roughly, I think 50%. That's the low it got to, give or take. But this is the expectations for the June 12th, 2024 meeting. So now there is a 61.7% likelihood that there is going to be a rate cut. So again, especially based on what Powell did say, now people are going to be looking for rate cuts, hopefully in June/July. So that's going to be the next big thing for the broader market. So that might be able to kind of fuel the optimism for the next little bit. But going over some data points, starting off with this right here. So there was a new analyst rating that did come down the pipeline, and that was from 𝗪𝗓𝗡𝗘𝗖𝗧, who does have a 57% success rating, did initiate coverage with a $10 price target. So I think overall that's a very, very good thing. And over the last couple of days, or last week or so, you have seen 3 new analyst ratings. So I think a lot of people are starting to be somewhat optimistic about SoFi, whether it be their good growth, especially right around the corner with their earnings, because keep in mind, once SoFi does hit another home run earnings, it's going to make Kyle look very, very good once it is back into the double digits. So I think there's some aspect to that. So you might see some analyst ratings leading into SoFi's earnings, just more of a boost in the rating ultimately. But regardless, pretty positive sign. Quickly going back over here to shorts, despite everything and SoFi going up as much as it did, shorts still did find it advantageous to increase 1.24 million shares. Utilization is 65.48%, 198.72 million shares overall are being shorted, and that works out to be 20.16% of the free float. Cost to borrow average is 1.04%, and interestingly enough, I just started to think about it last couple of days. It's been a while since we've seen cost to borrow minimum be negative, a good probably about 3 weeks. So whatever broker was out there physically paying people to short SoFi, they've long gone, or at least halted or done something. I'm not really sure, but very interesting to note. Looking at options though, $5.09 million in calls being purchased versus 1.93 million in puts. So dollar value wise, like that is huge. A lot of money is getting into SoFi through options, and 54% of all the options being done today are optimistic. So of course, I think that's a very good thing. Looking at some of the call options, there's a consensus, a very strong one in fact, for it to be over $8 in the foreseeable future. And then looking at puts, you do see a consensus for it to be sub roughly 750, between 7 and 750. So the risk versus reward is very much there and anticipating for higher highs to come. But on the actual chart itself, so with it closing at 754, it did close right above this R1. So a couple days back, or actually, sorry, yesterday, it did touch this point, so this S3, but ultimately did close right above this S1. So kind of did skip 2 fib levels. But no different than today, it skipped 2 fib levels, closed right above this R1. So I think SoFi is kind of correcting itself behind the scenes and in a very fast way. And so yesterday it kind of corrected itself just naturally based off of AI. Today was more of a correction due to institutions buying. So whether that does continue or not, we'll just have to wait and see. Just to give you a quick overview of the open interest, you do see it somewhat free and clear. Actually, sorry, this is puts. Looking at the calls, you do see it free and clear, assuming SoFi is able to stay above the 750. Like, it could easily run up to possibly the 9s. Like, this $8, which is only 15,000 open interest, isn't that big of a wall. So essentially, SoFi could run up pretty significantly from here. But like I mentioned, some points to watch for, just so this 752 going into tomorrow, just watch for that to hold. Vice versa, just the 735, and then above this is 762. On the actual chart, it did successfully transition from the lower to the higher percentile of the boiling band. Looking at stochastic, you do see a very nice deviation, so white line above the red. So of course that's a very good thing. So people's optimism is starting to really increase, and number of retail investors have been getting in, and you can tell that based off of the momentum indicator. So I think all in all, technicals are looking fairly good. Shorts increasing, they're just, I don't know, shorts are messed up no matter what. So this in reality is somewhat bearish, but the options is very bullish. So kind of mixed signals. Let me know your thoughts on that. And so like I said, I just wanted to quickly play this 1 minute video or so, and this is a good summarization of Powell ultimately and what he was ultimately saying.
Let's bring in Mark Zandi and Ted Rossman. Ted, thanks for being on set with me. Mark, let's start with you. Anything new that sticks out to you in what Powell said? As Steve noted, those expectations for a June hike have ticked slightly higher.
Well, he stuck to script. He's still beating the drum that he's got time because the economy is strong and inflation's still above target. I think the key words for me in the speech was they're looking at this meeting by meeting. So it feels like he's saying, look, every meeting is live. We could make a change at the next meeting or the one after that. So it feels, like a rate cut is coming. He did mention January, February inflation data. I think that's really critical. The inflation data is really critical here. Jobs less important at this point. It's all about inflation. And
so no different. This is why I said he kind of just regurgitated previous meetings, because this has already been said time and time again. He's going to monitor the data as it comes out. So no different than this time.
We got to make sure that the bump in January, February inflation was just, measurement, seasonal adjustment, which I think it is. So we'll get better inflation numbers, but we've got to see that. And once they do see it, I think we'll get a cut.
Ted, break down the consumer impact. What matters more for them, a looser policy or a stronger economy?
I think people right now are looking for a stronger economy and actually feeling that in the form of lower inflation, basically. Because right now, by many measures, we have a strong economy. I mean, we have strong GDP growth. We have the lowest stretch below 4% unemployment since the 1960s. But you say a lot of this to people and they say, well, I don't feel it. I don't feel that secure in my job, or my costs are up, or I'm not getting ahead. So I think that whole sentiment versus reality is really important. Depends where you are on the spectrum, too. I mean, if you have credit card debt, those rates and balances have never been higher.
And keep in mind, so payroll is coming out on Friday. ADP non-farm employment came out today. So yes, some consumers are feeling the pinch, but the data, which of course the feds are going to be really watching, in reality are absolutely phenomenal. So the consumer aspect has been the saving grace for 2023 and so far in 2024. So I think in reality, that's really going to play into Powell cutting rates possibly sooner rather than later. So I think based on everything, it'll be maybe June/July. So we'll just have to wait and see. So let me know your thoughts on SoFi. Did you buy today? Did you sell? I'm really happy to have bought a couple days back. So I think all in all, bigger things will be coming. Let me know your thoughts. Don't forget to hit that thumbs up. And with all that, appreciate all of you watching.